Well, Happy New Year, everybody. I kind of missed doing these market insights the last couple of weeks. It was nice to have a little bit of time off where I didn't pay a whole lot of attention to this. I mean, obviously, I was still trading my own account, but it's really fun to be back with all of you. I hope you had a great holiday. I hope you're looking forward to a spectacular 2026. The one little tip I will give you is, people generally around this time make a list of New Year's resolutions, right? Goals for the year. Those goals are just dreams unless next to them you also have the how. And that's the tough part. Because if you want something different, you have to do something different. We are all creatures of habit. We get locked into our comfort zones. So, really be thinking about what is the methodology that's going to be required to achieve those dreams, whatever they might be: greater wealth, higher level of fitness, better relationship. And then ask yourself very honestly, are you willing to pay the price? Because there's a price for achievement. Otherwise, everybody would be high achievers. I've often said you can have what the average person will never have. You just need to be willing to do what the average person is not willing to do and to stick with it and to build new habits and new ways of thinking, et cetera, et cetera. So, enough of all of that. I am really glad to be back here. Um, let's dig in. It is January the 5th. Hard to believe that it's already the 5th. First of all, it's hard to believe it's 2026. And then to think we're actually into it, that the calendar hasn't just flipped. Time just flies. Squeeze out every bit of life from every day this year. Quick reminder that what we do here is for educational and informational purposes only. It is not intended as investment advice. So, what's moving the markets? Interestingly, the markets haven't been negatively impacted by the US attack on Venezuela. That whole deal, and again, I try not to get um, political. I mean, I'll talk about politics, but I don't want to take sides and do finger pointing. We have enough of that in the world. But that whole deal is just bizarre to me. That we can identify somebody as a bad guy, and he very well might be a bad guy, and then we attack their country and we take their president and we put him on trial in the US. Imagine if the roles were reversed. Somebody didn't like what we were doing, came in and bombed us, and took our president and put him on trial, what the impact of that would be. Um, it feels just kind of like we've moved back in time 500 years. But I'm not a political savant by any stretch. I just, like I do with most things in life, I just try to take a step back and unemotionally just look at what's actually happening. And if that's not shocking to you, then you're not really thinking about it. Kind of like I saw this clip of this robot on 60 Minutes that moves almost exactly like a human being. If that doesn't scare the hell out of you, then you don't have the imagination to be able to forecast down the road what exactly that means. And I'm not talking about productivity. Productivity, that's got to be a net gain. But how about society? We're going to be able to create people that look exactly, well, robots that look exactly the way we would want a person to look, act the way we want them to act. And I'm just wondering if you had this perfect looking robot that responded to you exactly the way that you wanted, Why would you bother to mess with people and all of their imperfections? I'm just saying we live in very thought perplexing times. Um, and, I won't be around to see all of it. If the actuarial tables are anywhere close to accurate, but the world that my kids and my grandkids are going to grow up in are going to look so different than the one that, if you're kind of in my age group, that we grew up with. But it'll be interesting. That's all I can say. But anyway, you would think that, anytime we have the uncertainty of an event like what happened in Venezuela, that the markets would naturally pull back. Markets don't like uncertainty. And what are the markets doing today? They're up almost 1% across the board. Energy stocks, definitely the beneficiary. There's a number of energy and energy related stocks up anywhere from 1% up to 10%. And it'll be interesting to see if that's a 1 day deal or if there's some follow through. I have thought for a while that energy stocks, on a relative basis, are cheap, certainly to the rest of the market. When you look at PE ratios, PEGs, plus the dividend that they're paying, most are in the 3 to 4% range. Um, Now, it's been nice to see lower gas prices. I don't own fuel efficient vehicles, which is weird because I'm a very conservative driver, but somehow I feel like having, 600 horsepower is the thing to do. I never use it, but it's kind of nice to know that it's there. So with these gas guzzlers, I really enjoyed lower lower gas prices. The Dow hit an all-time high today. So it's weird to put Dow hits an all-time high with basically an invasion of another country. Now, the energy stock things, that makes perfect sense. But overall, as I look to 2026, I think it's going to be a good year in the market. I know we've had double-digit returns now, 3 years in a row. It's tough to do that 4 years in a row, but it certainly is possible. But earnings are going up. Fed's going to be cutting rates. GDP is moving higher. I don't see any reason why the market can't continue to climb. And most of the analysts, in fact, have it climbing for this year. 10-year Treasury, pretty steady at 4.17, not a lot going on there. And oil prices ticked up a little bit, but not a lot. I mean, we're still under $60 a barrel. So, sector rankings for 2025, communications stocks up 32.4%, tech 23.3. Remember when tech was supposed to pull back this year? The AI bubble and the demise of Magnificent Seven. None of that happened. Industrials up 17% makes sense in the wake of these AI data centers that are being constructed. Financials. I frankly expected financials to outperform the S&P this year, based on deregulation. I thought there'd be a lot more M&A activity out there and more IPOs, but there's a bunch of IPOs right now kind of poised behind a dam that's getting ready to break. And that could be a nice catalyst for 26. Utilities up 12.7%. Utilities used to be the old stodgy grandpa stocks, guilty as charged, but just the grandpa part, not the investment philosophy part. But utilities have changed because of all the nuclear development that we're going to need. Oh, my puppy dog decided to come up and see me. Hi, Charlie Brown. Hey, buddy. We interrupt this recording because there's nothing more important than this baby. Oh, yeah, I guess he heard me from down below and decided to pay dad a visit. Healthcare up 12.5%. Materials, all these have been underperformers. Consumer discretionary energy, staples, and the only loser was real estate, but 0.3%, not really a loss. S&P winners on the year, Western Digital up 282%. Probably something that would be more anticipated, Micron Technology up 239%, Seagate 219%, Robinhood 203. I think they're doing some very innovative things in the brokerage industry. Warner Brothers 172 with the takeover conversations. Newmont Mining 168. So all the, you know, we've seen the rise in the price of gold and silver. Lam Research. In my former residence, I did a whole man cave based on one trade on Lam Research some years ago. Palantir, Comfort Systems, AppLovin, followed by Carvana, GE, Nirvana. That goes back to the energy for AI, Tapestry, Amphenol, KLA, Helmet, GE. Well, that's nice to see. 84%. Corning, that's a boring stock, right? Not so much last year. And Intel made a comeback. So I've been doing covered calls on Intel, I think, for 2 years. Magnificent Seven performance. So, people are kicking dirt on this going into 2025. Not so fast, up 23%. So it definitely beat market averages. And when you look at the S&P 493, so you take out the Magnificent Seven, it was only up 13%. Mutual funds, I've been telling you mutual funds suck for as long as you've been listening to me. And the percentage of funds beating the S&P fell to its lowest level since 2016. It's just a bad deal. Mutual funds will make everybody but you rich. They make fund companies rich, the fund managers rich, their legal team, their marketing staff. And guess who pays for all that? The investors do. So investors are starting to figure it out. Look at the net outflow. Investors have pulled money for 11 consecutive years away from mutual funds totaling $1 trillion. I get some of the credit for that. I've been in front of 1.5 million people telling them mutual funds suck. I literally have a slide in my presentation that says mutual funds suck. So I probably only get a credit for a little piece of that, but I get credit for some of it. Enlightening investors. ETFs are gaining steam. Look at the number of launches in 2025, over 1,000. So we now have more than 13,000 ETFs, exchange traded funds. If you don't know what those are, think of it like a mutual fund without the fees. And they trade like a stock. So you can get in and out literally within a second. Most of them are optionable. So definitely an upgrade over mutual funds. We have a ton of cash sitting on the sidelines. Where's the total now? Right here. 7.6 trillion. One of my analyst friends predicts 1.5 trillion of this will, as interest rates come down, migrate over into equities. Last week's heat map, I don't give this a whole lot of weight. Volume was super light last week around the holidays and the week before that. Nvidia. So I'm a big believer in Nvidia. Look at the free cash flow they pump out. They're going to pump out in 2026 almost $100 billion of discretionary income. It's a beautiful thing. Here's your data center growth and the percentage of energy that's going to be required to fuel these. So we're looking at 12% of the energy consumption in this country, by the time we get to 2030, is going to be directed toward these data centers, and there'll be over 600 of them. There's now talk of putting data centers up in space. Like I said, what a world we live in. Margin expansion. It's a big story. As profit margins grow, the value of companies grow. And look, we're expecting to expand margins 14%. There's your net profit margin. So that's got to be good for the stock market, right? Tax refunds are on the rise. So the average taxpayer is going to get back about $4,000. Some portion of that, of course, will go into the stock market. Good for equities. Check this out. Irrational exuberance. Remember Alan Greenspan in his famous speech talking about the fact that, the price of stocks were unjustifiable? That was back in 1996. What's the stock market done since then? It's gone from, I don't know, the S&P, maybe a little less than 1,500 to over 5,000. I'm just telling you, woe unto the person who bets against the US stock market. It just doesn't work out. So these are the last 20 years of returns. There have been some losers, right? I mean, 2008, remember what was going on then? We had the financial crisis happening in this country. 2022, that was the Fed raising interest rates because CPI had hit 9.1%. But look at the green. 17 out of 20 years. Last year, up 18.2%. I mean, if you're not crushing it in this market, the problem is not the market. Market sentiment finally starting to tick higher again. So this is a 6-month outlook based on a survey of independent investors, 42% bullish compared to 27% bearish. Now the averages are 37.5% bullish versus 31% bearish. So definitely feeling better than average. Let's take a look at the charts. When in doubt, look at the charts. That's where it's all happening. So you can see we are still comfortably above our yellow line. That is the 50-day moving average. You can see the slope from left to right is moving higher. So for the moment, everything looks like it's in great shape. So we are off to a great start so far today. In 2026, I hope it's just the beginning. I wish you and yours a fantastic year. We'll do everything we can here to give you the kind of information you need to help make that happen. So I will see you back next week. Until then, be safe, be blessed. Bye for now.